And as she just mentioned, PulteGroup, the nation's largest home builder, beat estimates by reporting a profit in the second quarter, the first in almost 4 years. Sales were boosted by buyers seeking to capture tax breaks. The CEO, Richard Dugas, joins us now from Farmington, Michigan with more. Mr. Dugas, welcome to Bloomberg News. Good to have you on.
Mark, thanks for having us. Glad to be here.
Sir, one of the questions that a lot of people are asking about home prices now, how low can they go and when do they start heading higher again?
You know, we don't see prices going much lower from here. That's not the problem in the housing market. It's consumer confidence, which is really driven by job growth and hopefully job growth in the future. But prices fell precipitously in 2007, 8, and 9. We've seen relatively stable pricing the last many months.
Sir, I was reading an article on the Bloomberg terminal today. Donald Tomnitz, the chief executive of D.R. Horton, he was saying about the tax credits that boosted sales earlier in the year. I don't want the tax credit to be reenacted or be recreated or extended. We want to get back to a normalized market. I was wondering if I could get your thoughts on that.
I would agree with that. I think we have seen the intervention from the government for many months now. I think it was helpful, particularly as consumer confidence was very shaky about housing. But even though housing is at a very low level of demand today, it at least has stabilized. And I think he's right. I think it's time for the market to get back to the normal supply and demand factors that drive it without the outside intervention of the government.
So now, again, that goes back to jobs and that consumer sentiment there.
Right.
When we see the jobless rate still near 10%, what does that tell you about consumers' ability to buy homes and also about the credit market, which many people say just is still frozen?
Yeah, I think it's going to be a long, slow haul to get back to a normal level of demand. Having said that, our company is positioned very well going forward. We merged with one of our large competitors last year, Centex, and today's results point to the fact that we're able to leverage ourselves significantly to get back into positive territory on an earnings basis. So we're able to compete at this low level of demand and still deliver value for our shareholders. But to get any significant rebound in the market is going to take job growth and consumer confidence. And frankly, there's not much the individual housing market can do about that. It's up to the broader economy. But we're prepared to weather the storm no matter how long it lasts.
And I'm taking a look now at the S&P Super Composite Home Index. And of the 12 members of that index today, 11 are up and you are up as well today. Are you getting a sense industry-wide that you and your competitors are getting a sense that we have reached the bottom and now there's the only place to go is up?
You know, if you look at share trading over the past year, it's really been stuck in a range. I think what we have is kind of this sense that probably the worst is behind us, that clearly kind of the liquidity crisis and fears of significant problems in the home building industry are well behind us. So,
right.
Yes, I think, in fact, we're probably at the point where we can only go up from here. I would just caution investors and others watching, though, that it's going to be a slow climb from here. I don't see anything bringing about a big boom in demand anytime soon. Having said that, I like our position.
Well, you have about $3 billion in cash on hand. What are you going to do with that money?
Well, obviously, we'd like to return it to our shareholders in the form of either putting it back into land, which can hopefully generate good returns, potentially, looking at other uses of cash, such as debt repayment and other things. But we haven't made any definitive statements about our uses of cash because, frankly, the market's somewhat cloudy, and we're a conservative company. We pride ourselves on being financially very fiscally responsible.
Right.
So we're not in a great hurry to use that cash one way or another right now.
Richard Dugas, the CEO of PulteGroup, joining us live from Michigan. Mr. Dugas, thanks so much. We appreciate it.
Our pleasure. Thank you.